Hello folks, I'm LA Little and this is your daily TA wrap. Well, we take a look at these markets from a neoclassical perspective, asking ourselves what happened today and what does it tell us about tomorrow. You know, I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. I had to take a quick look at that clip again. If you haven't seen it, you know, Google's been on a buying spree of robotics firms, and I noticed that we saw a big pop in one of the biotechs that I've been watching and actually have traded, or attempted to trade, I should say, which is iRobot. iRobot being probably the primary one out there that pulling up the charts here that has caught people's eyes because they're actually in the stores now. Here's iRobot, and you know, so the Google news gave this thing one heck of a pop. I mean, like 15% or something, and now you see it's coming back in. Longer term, this stock looks good, but you know, like so many stocks, they've gone up so far. It's hard to justify the price levels up here. With something, you know, with just a news event driving it like that. So, iRobot, Google robotic companies. That was Boston. What was it? Boston. I forget the name of them. They bought them out here. What's the name of this? Boston Dynamics. Yeah. So, you know, Google's bought like 8 of them now, and I think that is the wave of the future. Just like we saw technology, you know, automation of cars in the early 20th century, we're going to see robotic vehicles. We're going to see robots in general. I mean, it's going to start happening. And whoever's positioned best is the one that's going to dominate that field. Google clearly believes that field is a field to exploit and to try to move into, and that's what they're doing. Let's look at the ending numbers today. We actually had kind of a slow day. I guess it's not a big surprise, given that we, you know, had a huge move yesterday. The Dow was the only one finished up 11 points, 16,179. Everything else was pretty much flat, with the exception of the technology and the Russell. The small caps got hit for about 0.75%, down 8 at 1125.5. The NDX lost 11. 34.98.5. That was down 1/3%. And the IXIC about the same. Looks like I need to put the latest oil up here. Let's see if we can get that up while I'm talking. Gold got pummeled today. The dollar rose. Gold really in a bad spot with respect to what's going on with it. And and that, you know, the dollar getting strength. The dollar was only up 0.25%. It was up about 0.5% early. It looks like it gave some of it back. We'll look at those charts, but gold was down 42 bucks, I think, today, and it's down there testing those lows on an intermediate term time frame. And so, you know, got some issues there. Oil was actually up, copper down, everything but the oil and natural gas was up. I mean, was down and down fairly heavily. Silver the same. If we look at the charts and take a look at what's happening there, really, you know, not much after yesterday's bid strength. The thing that was probably most notable today was the fact that they held. I mean, you got a 40-something point turnaround yesterday, so that you held at the top is actually a good thing. Now on the SPY or the SPX, you didn't get over the highs. Yesterday was 1811.08. You got to 1810.88. Volume lighter. You're hanging up here right up underneath these two swing point highs, and you can see what's going on here, right? You got a swing point high here and here. Those highs are right up there. You're sitting right up underneath them, right? You got options. You got, I think it's quadruple options tomorrow. You just had a big push up. You hang right there. This thing's going to try to break out. I mean, that's the way this thing's set up, right? And as long as you don't get something to topple it and pull these markets back, and we'll talk about that a bit as well, you know, they're just up there trying to push out. Now, you know, my expectation was that we were going to see these markets capped. It looks to me like we are going to get at least some nominal new highs, and the reason I said I thought they were capped was because of Europe, because primarily the CACs, the French market, had shown us significant weakness, right? So the low here, 42.04, today it pops up to 41.84. So you get within 30 points of a retest regen, and what happens? There's no volume. You leave a tail. What does a tail tell you? Well, that tells you they're selling it. It went right into that area that we talked about, right? The high over, the low on this October 10th bar is 41.48. It closes at 41.54, so it's slightly inside that, right? Big tail though, but the big thing was it went into this big bar. Bottom of that guy was 41.72. Again, we got the 41.84. You pop into it, you can't hold it, you give it back up. At best, this one's going to get up and do a retest, regen, and fell. I don't even know if it's going to get there the way it's set up, though. So, CACs, in my opinion, is going to be constrained. It's just a question of what the rest of them do, and we'll look at Germany next. But this, to me, is an ABCD down. It's not as bad as it was, because now you finally got a nice big pop, right? But the projections are still pretty deep, and they're going to take you down towards the swing point lows on the weeklies. Why I say we can get a push, though, is because the DAX did not break. The DAX, remember, this is the one I was concerned about, and it was set up for the potential to break down. You got multiple swing point lows down here, right? All those swing point lows were within just a few points of each other, and this thing was hugging the road, right? I mean, it was right there. You can see how close it was when it was down here at the lows. But it, just like the SPX, when the SPX was doing a retest, regen, and powered higher, the DAX did the same thing, and then today, right, answered the question of whether or not it was going to get over that area we talked about yesterday, and I said more than likely it would now, because it just seemed almost impossible to hold it back, given that they had strong numbers as well, right? They're the last one in Europe that has really strong numbers. And I'm not talking about strong numbers from the sense that, you know, we used to have no economic activity and now we have some. These guys have had economic activity and they still have strong economic activity. The big problem, though, is that of the big three, right, France is not doing that. And so you're losing one of the big engines inside the Euro, inside the European Union. But at the same time, you know, if it just holds, just like we talk about with bonds, when we'll look at bonds next, if it just holds, then you know this one can come back to the top, and it looks like it will try to, and it's going to try to go right back to the top. That swing point high is right up here, right? It's going to try to go up there and test it and try to break out. Now, given the move, I doubt seriously it will break out. It will probably work its way up there and then hang. At the same time, the CAX is going to try to work its way down. If you're in Europe, I would be shorting the CAX and buying the DAX. I would have been doing that yesterday when we started to take off. You could have tried to do that through the ETFs here if you wanted to trade, you know, some sort of a spread trade that way. It was much easier just simply try to buy our indexes. But you know, this is holding, and it's gonna hold a range now, and so that kind of puts Europe on hold, in my opinion. If we look at the FTSE, which is the last of the three, it's not really showing much. It's just grinding a little bit higher. So when you look at all of these guys, you know, in the FTSE here, it looks to me like it'd test this and probably get back up finally and test this swing point low. So that'd be a retest regen. More than likely, that will fail right in this area, and then you'll have on the weekly, you'll have an ABCD structure down finally. So Europe is going to be a problem. It's just delayed. It's probably going to raise its issues sometime, I would think, 2-3 weeks from now is probably, you know, the way this thing plays out. Maybe a week and a half, 2 weeks, right at the first of the year potentially. So Europe, it's going to come back, and it's going to affect us again, just as it was starting to. It's just that with our numbers and with our surge that encouraged the Germans to go in there and buy their market, which just kind of delays everything in terms of any kind of correction, continuation in Europe for now, which of course gives us time to do our thing. So going back to us, so I looked at the SPX, didn't really tell us anything. Let's look at the weakest one, the Russell. The Russell came back. Now the Russell was interesting because the Russell came back in. Remember, this was the swing point high. Russell comes back into that area. The price point on that is 1123.26. It fades back into 1125. So it holds above the swing point high. It's clearly above the December 11th bar. And even though it got a nice big push yesterday, got a pullback, this looks like just a little pullback off of a big surge in one of the, not the weakest, but one of the weaker of the markets right now. The other one that's been weak is the NDX. And if we look at the NDX, primarily that's a function of Apple. And the NDX comes back down, but it did a nice little doji at the end and held. So this looks to me like it's going to try to work higher, despite Apple trying to work back down to these lows. So Apple down, I don't know, it was 1.5% today, I think. Couldn't get anything going all day long, just kind of drifted down. Got worse as the day went on. Apple closed down about 1.25%. And looks like it's going to try to work its way back down here. It doesn't have to, or does it? I think it already had the volume in the test. 539.25 at 22.6, and you traded into it at 20. So you hit it with enough that you can test again, but you didn't hit it with enough to break down. So Apple doesn't have to come back and test, but it certainly can. Given the amount of volume that it pushed into it with. Dow Jones, I believe, is still hanging at the highs. It was the only one that was up today, and that one actually got over and back under, it looks like. No, it held over. So it held over the highs. Less volume, but held over the highs. And a doji. So, you know, a doji can be a turn point or a continuation. So we'll see how that one shapes up. But right now, just looking at the indexes, same thing we saw yesterday, in that yesterday we expected it would try to push higher. It certainly still looks that way. I don't see anything different. Now tomorrow, quadruple witching, we're going to see some volatility. It's also the last day that we're going to see a lot of volume. So anybody and everybody that wants to do anything, tomorrow is the day to do that positioning with all the volume. So expect a good chunk of volume tomorrow, and for anyone that wants to position into the end of the year, taking advantage of that. Sector-wise, the only ones I saw, I didn't see anything significant here. I saw the semiconductors come back. Not much volume though, kind of an inside day, a little, this all just looks like consolidation after a huge move. Here's the XLB. XLB gets over, let's see, it looks like a failure at the high, 4507, closes at it. It's not even a failure, it holds, and it's got the volume. So XLB, XLE was pushing up today. It's pushing into a swing point high. Yeah, there it is, 8704. It trades to 8692, doing 11.2. It looks to me like it's going to try to break into it tomorrow and try to get over it. Big ranges, all these ranges held. They didn't break down. They were all down here. Some of them broke, some of them didn't. But now you got them going the other way. XLI has been one of the strongest ones most of the year, along with the XLF. Big volume over the top, just continues, right? So that's kind of the thing you want to see. You want to see these guys continue to pull away, right? So if you get a big move like this, you want to see the next day or two, right? Just kind of stretch it, build the cushion, build the cushion so that you get a little bit of a pullback, and then they'll come in and buy it. And that's what they're looking to do. The XLY was one of the stronger ones yesterday. Let's take a quick look at it. And it's got a little doji hanging. Looks kind of like the Dow chart. And that one actually got over and back under, but I wouldn't call it an extended move. It's just inside the range. So that one I would not call a 2-bar reversal, which you hear me talk about. Let's look at the ox markets. I know gold got slammed. Let's see how bad that was and what kind of volume they had. So gold comes down, breaks a swing point low on the daily. It has volume, right? Volume the last 2 days. But on the weekly, it's a different story. Let's look at the weekly over here. So on the weekly, you're coming back in. That low is 114.68. You go under it, you go back over it, and this is a reasonably extended move. So it tested and fails on price, and this is Thursday, so it's going to fail on volume as well unless you get huge volume tomorrow. So gold to me looks like it's going to hold this bottom despite these big bars on the daily. So what that suggests, and don't go running out and buying gold because I'm saying this, but this looks like it's going to hold. So assuming gold holds tomorrow and holds above this low on the weekly, right? Then what you're probably going to see is and this also looks like it just finished an ABCD structure. It overfinished it. You're probably going to see this thing come right back up and test these swing point lows again on the retest regen. Right, and then that will be the key trade on gold, because if it can get back up and over them, right, then you can try to put the bottom in again, and you would have the support of the weekly. But if it can't get up here and fails and comes back down, sets up another ABCD structure, then you can blow away this low, and gold's on another trip down. And if you pull the weekly over on gold, the monthly, the monthly has the same sort of setup here. 1, 2, 3, 4, 5, 6. Oh, that's interesting. So it doesn't set up a low because it doesn't last 6 bars. The 6th bar is this bar, and it's already under it because it's the same swing point. So it's actually not a swing point, and you're coming in here and you still don't have the volume. You can see the huge differential in volume. When you look at it on the daily, you think you're getting huge volume, and on a daily you are. But the cumulative volume on a weekly just isn't there comparatively, right? The last low out here was 279 million contracts or shares. We're doing 133, and we don't have that much time left, you know, in terms of the month. So, and then you pull it back over here and you look at it on the way up. Now that's 113.31. So in other words, we could trade down another $100. Am I reading that right? Yeah, this probably is 10 to 1, right? So that would be $100. You could trade down another $100 to 1130 area, and still would be holding on the monthly. And there isn't a break of the swing point low. Now, all of this, mind you, is bearish. It's not as if it's bullish. What you're doing on gold is you're looking for the place where it is going to turn, because it probably will at some point. Because gold, being a commodity, they will quit producing it at some point. I mean, I told y'all about Barrick Gold shuttering a plant in, I think it was Argentina, just last week, I believe. Let's see if silver looks as bad while we're here. Did I click on it? Let's try again. Here we go. Now, silver's not to the low yet. Silver doesn't even have the volume comparatively, and clearly doesn't have it here. Again, that's another suggestion that the gold low is probably going to hold, and this thing's going to flip around and come back up, and then you're going to get the real test, the one that determines, you know, probably what gold is going to do to start the new year. That's probably the way that thing's going to set up. Let's see here. What else happened? Those were the main things. Let's see what the dollar did, because it looks like it gave up some of that charge that it had. And it did. Set a tail up there, went into it. Has good volume though. So that price point was 21.73. And it traded just shy of it. And let's see what the euro did. And this also, of course, plays into gold, because the euro was selling off hard. So the euro's got the volume on the way back still. Euro looks to me like the euro is going to try to get all the way back down into this area and close this gap. So a little bit more, and that ABCD structure really isn't much of a structure, is it? Because you had the huge bounce up, so it's really nothing there. Yeah, that's the first area, and that's where you would expect some sort of an attempt to hold it. If the euro finds support here, that of course should support gold to some extent, although gold has been kind of on its own lately, doing its own thing. All right, I think those are the main things. Let me quickly look at the UNL, the UNG. I know we got some nat gas players out there. Oh, look at that, it broke out again. What a strong move. Yeah, that one's going to, it's got the juice. It's going to make it all the way back up into this higher resistance zone, it looks like. And on the opposite spectrum, I assume that the ag sector is still getting pummeled, which it is. And oil was up today. Let's see if that's doing anything major. I got a couple questions that was emailed to me. I'll take those first. If you guys have any, I'll take yours next. Oil couldn't hold though. Oil gave it all back. So did it close over that high, 35.35? It did not, and it had good volume though. 5.7, 6.2. But you're coming into this big bar on the way down, which is 10. So that's the failure. So yeah, oil's got to consolidate more. It's not ready to take off yet. It's just not there yet. Okay, let me see. What were this? I had two questions emailed. One was, I enjoy your nightly videos. Could you discuss SCTY? Okay, so SCTY. Let's see here. Get over to this. Type it in. And let's see what we got. So this is a solar city, I think. It's in the solar sector. They sell to consumer residentials. And the question is do you see any buy points for a swing or intermediate term trade? Well, so this is so Solar City is in a nice big range here, right? It's probably a range trade because of the way it traded in terms of these bars. This area here. So this high and this high. You can see the spike high here and the first high there, right? Both big volume compared to everything else. That's probably going to take a while to create enough juice to get over that range, because you can see that that range is these resistance zones up here now on the weekly. So that's the first thing. So you can trade back to the highs. In fact, I would expect it to try to trade back to this area up here. So the target is this area. That's kind of where it's going to try to trade to. It is set up well the way it's setting up right now. You had a low. Let me switch tools here. You had a low down here. It undercut it, and these solars are very spiky, I should say, or like they have high beta, right? This was trading into this big bar. You can see it was a breakout bar, so there was a bar over here somewhere that was a retest regen. As it comes into it, it tests right at the bottom. It looks like it actually tested that bottom. That low was 41.85. It tested to 40, not quite, 42.38. Okay, so it comes in, tests towards the bottom, gets a nice bounce up, and then it just kind of gyrates sideways here, and the only spikes I see are upside. That tells me this thing's probably going to go after this little swing point high. If it gets over it, then it's setting up an ABCD structure, and that structure is going to take it right back to the highs. So yeah, this looks like the spot actually. I would use this as my support zone. My stops would have to be down in here somewhere, right, on a swing trade. If you're doing intermediate, you could go lower and put it down here. But you're shooting for the top, so I think you probably want to swing trade it. And that distance from here to here is a little bit less than that. You got about a 1.6 or so, but the probability looks pretty high. So that looks like a pretty good trade. Let's look at the other one that was asked for, DDD. This is the 3D printer, and it's all the rage right now. And this one also looks like it's set up probably a range, given this big spike and the way it came off with volume. Okay, so there's two things here. So you get a big spike volume-wise, right? And you come off with volume off the highs. And what I'm talking about is I'm talking about the highs on that bar, big volume, bigger volume, right? As it comes down. Now what does it do? It climbs all the way back up, and it's going to come right back up here and test this, and more than likely going to fail, right? The probabilities are high. That is going to be a failure at those highs. And then you're going to see this thing come right back, and it's going to trade this range for a while. So what you want to do here is simply wait and try to buy it back down here somewhere. So I wouldn't be in a hurry on this one. This one, and when I talk about a range trade, this one, the two ranges, you have the top, right, which is about there, and you have the bottom, right? And they always end up almost equal, usually, and that's about what they are. And so you're in the top half. You're going to try to test the top. It's probably going to fail. You'll come back down here, and if you break underneath that, you'll come back and test these lows again. Do note that if you do trade this, right, and this is a volatile stock, very volatile actually, if you do trade this thing, if it comes back to the bottom end of the range, it is going to be a buy, but there are two swing point lows laying there. So you do not want to see it break these two, right, because that would drift you or bring you all the way back finally, into a much lower area. Right, then you'll have a range up here and a range down there. So All right, those are the questions that were emailed to me. Let's see what we got over here. Let me take this one right quick. I'm running out of time. What happened to the inverse relationship between the dollar and the market? It used to be for years dollar up, market down. Nice commentary on gold, by the way. The inverse relationship. I mean, well, let's back up real quickly. Relationships are made to shift, right? They don't stay the same all the time. I can remember back in the 90s having a strong dollar and a strong market. So you can have, it doesn't have to be a weak dollar, strong market. Yes, it was that way for a while. Every time the market sold down, every time the dollar sold down, market went up. But now you look at it and the market goes up without the dollar, going down more. Those relationships can change. Now, I usually discount that for a while and say, hey, I got to see that for an extended period of time to make me think that relationship has permanently changed or has changed for a longer term effect. I'll take a look at that and see what that relationship looks like. I agree with you. It's been the opposite. But if you stop and think about it, this market's been the opposite of everything all year long. If I look at emerging markets and I look at our markets, we're up 35-40% compared to them. If you look at those relationships, and I'm talking about over the last couple of years, those relationships have been totally skewed in a number of areas, and I honestly believe the quantitative easing has a lot to do with a lot of this stuff. But then that's a story for another time, and that's an argument that you can argue both sides of it. But the relationships can change, and so it doesn't mean anything really other than the fact that they have changed to some degree. People will talk about how the markets go up because the dollar gets cheaper because more dollars buy. It takes more dollars now to buy the same amount of stock. Yeah, and you have the dollar gets cheaper. You're getting the currency favoritism for a lot of the overseas operations, so that's also Benny. But you can go to the other side of the argument. You can argue things against it as well. So it's not as simple as one relationship is the key. It can be multiples, and it has been multiples over the years. So don't be surprised if the dollar is strong and the market's strong. It can certainly be that way. Hey folks, it's the end of the week. Markets are set up to try to go higher. The constraining factor, in my opinion, was Europe, not the Fed. I suspect that that's on hold for a while. The only question is can we uncap this market and get that breakout? Tomorrow is a good day to do it. It's Friday. It's the last big day of volume. And you've had a big week already. Why wouldn't you tack on a little bit more and get the breakouts, right? Wouldn't you like to, have the news at the end of the week if you're on the bullish side, favoring all-time highs and breakouts and all that kind of business, right? So, tomorrow I think there's a good chance they'll break it out. So we'll see if they can do it. The one thing you don't want to happen is you don't want to just hang up here for 3 or 4 days, because if it hangs and can't move, the sellers will come back. I'm L.A. Little. That is and was your daily TA wrap. I'll see you on Sunday night, and we'll start the Christmas week. I'll probably have an abbreviated show next week. I don't think I'll do shows each night. It's going to be too slow. These last couple of weeks, I might take a day or two off here and there, just because it's family time and there's not much happening in the markets anyway. But I'll post that. We'll post that up on the site so you'll see what the schedule is. But I will see you Sunday night, so be there, be square, as they say. Have a great one. Take care, everybody. Good night.